Hi, good evening, guys. Just give me one moment. I'll sharing the link and see. Yep, share it. Hi, Satish. Hi, Pradeep. Hi, Gaurav. Yes, Gaurav, I'm feeling better, but still, like I have uh, a little, I would say, redness in my eyes. But everything is fine. Hi, Heath. Hi, Sven. Hi, Devinder. Hi, Yagnesh. Hi, Prakash. Good evening, guys. Hi, Nisa. Hi, Vishal. So, guys, market, hi Srini, hi Vishal. Market worked out exactly what we anticipated in middle of July. That yes, first week of September to first, like last midweek of September to first week of October will be really, really disastrous, and that's what we are seeing. We're just seeing one single clear flow. Inflation is back, which I was always vocal about. That yes, it's not going away; it's back. So it's good to see that things pan out, but I made a big blunder and I'm like really down in the last couple of weeks. So I need to cover that up. Hi Ram, hi Manu, hi Pradeep, Sachikal. Thank you, Gaurabai. Hi Lalita, hi Devinder, hi Kamal, hi Justin. Good evening. So in terms of ES, I think let me just go back to ES. I'm not even open like my think or some in last few days since I made some blunders. So if you remember, I mentioned about this neckline and the length. So 427177 was one neckline, and now we are going towards this green line. This line 4195 is the ultimate bottom. If we lose this area, things will like this is the area where the big seven will start to fail. We are almost there. It's not that we are far away. We are there. The momentum is really weak. Now the DMI, last time we saw the DMI was neutral. Today the DMI is like in red. Uh, Let me just say hi to Prabal, Jeremy, Ganesh, Manish. Thank you, bye. Kishore. Good evening, guys. So I think we still have too much to go down. We are still not done with it. Like if you take out, if you look at my this thing, like Apple is still not at October's low, which was 124, which is right there. It's still too far away from that. Uh, Adobe was 276, now it's almost double. Still far away. EMD was 54, it's 100. BA was 124. AVG was 415, now it's 800. So these needs to get corrected and they need to see some significant correction. So I still think TLT 86 was my target for TLT. It broke that down and now it's heading much lower. So 86 was my first target, and if it go down, I think 75 is the place where it should find some support. So if I go into the time frame and go to the max available and go to day, I think it can only accommodate this. So let me just go and change this one. Go with weeks. 20 years should be enough. So we are back to the areas of 2006, 2007. Like if we reach 86, like even in 2008, the 86 was broken and we went down. If I expand this to more, maybe to the max available, the lowest was 80 as per the last 20-25 years. Hi Nilesh bhai, good evening. So I think we are not done yet. And the double whammy with all this is that Bank of Japan, and I posted Bank of Japan intervention. Bank of Japan needs to manage their currency. And if you check, I think USD Japan, JPY, JPY, USD, how it comes. Hi, good evening, Vijay, Manjunath. Maybe I don't have FX open, but Japanese yen, like I can go to investing.com and check on Japanese yen. Or we can Google USD JPY. This is 149. Like if you look at this max chart, it's after like 96, it hit 150-ish area, 98, and now it's coming back. This is bad. Now, in order to reduce this, because it's getting weakened, like Japanese yen is getting weakened every single day. It needs to come down, and for that, they are trying to sell dollars so that there is more dollar availability in the market and the price of yen goes stronger, but that is not happening. So in this intervention, Japanese bank, which is or Japanese as a country, is holding the maximum number of US treasuries. If they are selling dollars, then they are selling bonds to cover that dollar, and to cover that principal of the bonds goes down and the yields goes higher in the treasury markets. So impact will be bad and yields are going to go higher. So the first sign of relief, if you see in the market, we need to see Japanese yen to ease off. If it comes down to 144, 145, it's okay. If it doesn't, I will not be surprised if you see TLT to 75. TNX, which is the 10-year yield, I think it has a lot of room to go up. And we can, again, if we follow the same principle, we can draw our regression channel from 32, or if you want to go to, let's say, 3-year weekly. Let's start from 2021. This is the yields. Okay. Now I'm gonna try and make usually I do not draw on weekly candles, but if I have to draw, I'm gonna pick up this piece right here. I would say this one right here to the top, came to the bottom, and right now. So this setup is heading towards 51, which is like still 6% higher. So yields can go higher, really, really higher from. Don't be surprised if you see them going higher and higher and higher. We are just holding this area beautifully, and we bounced right from 38 percentage. Like we stuck couple of time around 38.2 Fibonacci. We found the base at 23. We tried to break out and now we are broken out. We should hit 61 and then we will take some breather. As of now, it's a clean sweep on the higher side. So I don't see any yields going down at this moment. That's 10x. So in this market, if you want to stay away, stay away. This is not a market to trade because we are in the very oversold territory. Like if you go to, let's say, NQ is still neutral on the DMI. It's still holding that 14,600. It has not broken down yet. The head and shoulder is there. That will happen around 41.95. It is held by Microsoft. It is held by Nvidia. We need those stocks to break down. If those stocks break down, you will see a breakdown on NQ. As of now, they are just holding, holding, and holding. So if you want to, you can simply imagine if all those big companies go down, things will not be really good. We tried one, two, three times to cross 12 EMA, 14,900, and we failed. We failed badly. And once we failed badly, the breakdown. And now this breakdown is prominent because we lost this area back in April, and then we went on to make 16,000, no, 1,062. Now from 16,000, we are almost 8% off to today's low, but we are still far away from 14,000, which is the back test of this green line. Somewhere here, 14,000. So still we have a lot to find out where we are heading. And the DMI is still on 1 day and 2 days as neutral. So be careful here. If we have a short squeeze, that will only happen on triple Q. The stocks on the other sectors, banks, industrials, healthcare, they may be really, really impacted. This is the last leg in the market, which is holding up high. If you see IWM, I'm just talking about all these things upfront because these are really important. And I'm going to share the Zoom right away because I want this to be a discussion rather than like a level session, because this is where we are in a critical stage. If we lose this area, we might end up in a big mess. So let me just share this Zoom link. I would invite you all, come here, let's talk and share each other's perspective. Okay. So you have now the option to join. I'll wait for you guys. And then anybody has any opinion respect to bonds, yields, indexes, please come forward and share, because this is a collaboration, right? So if we both can work out something, figure out something, it should help all of us. So I'm going to wait for you guys. Anybody who wants to join, please come forward and join, and then we'll see what we can do. I'm seeing black screen. No, there's no black screen. I'm just waiting for guys to jump. I have two-person, Harsh and Mayank. Manu.
Hello.
Hi, Mayank.
Hey, Neville.
So, guys, you have any thoughts? Nilesh bhai, come join. You're also watching TLT these days, so
I jumped into JPMC today, Neville,
okay.
but it went down. I got in at 144 and it went down.
See, this market is going to be very troublesome. It's not going to be easy.
I know, I know.
I like myself have lost a really big amount in the last 2 weeks, 3 weeks. So, and I did it just because of two bad trades and then over trading. But
Oh, okay.
None by
I hate.
us
Yes, Manu, go ahead.
yes, none by. So usually there is, in the recession times or bad times, there's usually a rotation kind of thing, right? So, but in
No,
that case, the SPY generally
no,
holds off. Yeah.
no. That's not true. Rotation only happens when the distribution is happening. When the market is falling, every sector will fall. It's
Correct.
just a matter of time. The tech will go down. Right
Yep.
now, you see
Yep.
Meta is holding. Right now, you will see maybe Nvidia is holding. But all these companies, they may bounce really strong when the market starts to bounce back, but they will give up. If market is, see, end of the day, these companies work on what? They need customers. If the entire America is struggling, how would these companies going to get the revenue?
That's right. Yep.
So there's no safe sector as such. It's just that you need to wait and keep an eye on stocks which are not going down as hard as the market, and you can jump on them once they are strong. The market is strong.
Right, right. Just one more question, always. So, this student loan repayment thing is back in picture. I think SoFi is one of the biggest beneficiaries of this student loan thing. Initially they declared that they are going to write them off or, forgive this student loans, and then it's back on table. So SoFi might be interesting watch. I'm not sure, but yeah, they look pretty strong. So,
See, again, that's one of the companies, but you can see the reaction still 7% down.
yep, yep.
So unless and until economy comes back with strength, right now, just imagine yourself, right? Imagine you need money. Can you borrow the money easily?
Oh
No.
no, no.
Guys, if you're not speaking, mute yourself, please. So if you're borrowing money, you are not getting that money easily because the money is not issued by the banks easily because they like look at the big banks. They are not giving you deposit rates as like 5%, 6%, but they are giving you loans at a high percentage. So they are vetting you out to the bottom. And that's why having a new money is not easy. So people go out and they try to get private money, which is expensive. Now, if the money you are getting is expensive, it tends to create like supposedly you had a bad month in your business, but your interest and your principal for that installment, the money you owe, will still go out, and that's take out the business. That's why the bankruptcies are getting higher. With COVID, the amount of money which was given to the people, they are used to now free money, and they are used to that they have built certain consumer habits for which they are taking loans from the credit cards, and that's why the credit card loans have gone through the shelf above 1.3 trillion. Delinquencies will increase, just a matter of time. Everything will the other aspect here is the commercial real estate, which is getting difficult in state, and the moment that goes down, it will bring everything. That is the biggest, most concerning thing for me, the commercial real estate. And with these higher interest rates, and they are going to be there, pictures is not happy. It's going to be a very sad story, and not for this year. It's going to be there for many years.
Yeah, even with the election, feel like coming in pictures. I'm not sure if
Again,
Republicans are pro.
election, again, guys, election is the theme which people on Twitter started taking out. There is no such data pushing that, in fact.
Got it.
So don't go by that. Just go look at the data, have confidence in what you see, and then trade on that. Again, I'm just sharing my mistake. I trusted some of the messages in the regarding the flow, and then I lost good amount, and then I tried to do a revenge trade, which I lost really good amount. So I'm just sitting down for last 2-3 days, just watching it. Let market figure out what it needs to done. Do very small trades, maybe 1 lot, 2 lot at most, and then just sitting back. That's it.
Got it. Perfect.
Do not try to bottom fish this market. So, guys, anybody who has any understanding or any thoughts regarding yields or the market level itself? Because market is very clear. It's ES is giving up, and NQ is still to give up. NQ is holding 350 area on like if you're looking at triple Q is holding. This is the area which is holding this line. We are right there. So tomorrow, if market goes down, this will go down. We have gaps. We have gap at 333. So if you're not able to clear 355, 356, we are going down. We have back tested 12 EMA multiple times. And if I change this into Heiken Ishii, you will see that it was green up till this moment. Every time it is testing this black dotted line, it is bouncing. But it is not far away from the candles, the EMS, they're touching each other. So if we lose this area, this could be really, really big opening on the downside. And that will happen because of Microsoft, because of NVIDIA. So I'm waiting that tomorrow, if we try to go towards 357 or maybe 360, that's a really good area to add the puts. This market will break down. As we discussed in July, that yes, September and this month will be really, really bad. Again, anybody who has any opinion regarding this ES, NQ, or yields, please share your thoughts. Guys, I invited you to speak.
And Naval, it's Justin.
Hi, Justin.
I just want to echo what you're saying. I think your post this evening was perfect. Just understanding yields, dividends, bonds, treasury, corporate, how they work, how they take away from equities and move towards bonds. I know business owners that are very well off who almost a year ago started to move their money towards treasury bonds because they were getting 4% and now more than that going back a year ago. You couple that with mortgage rates increasing, as we know. You couple that with credit card default is hitting a max high, and keep in mind we're going into the holiday season. I think more people are going to spend money on credit. I think you'll see more. That number is going to continue to increase through the end of the year and into next year. We see credit or student loans coming back into play, where their moratorium, their time of not having to pay has gone away, and there's pressure on payments for that. There's so many indicators that, to your point, is pointing to a heavy market. It's a market that is, as we've seen, trying to recover. You see some days where you get some green candles like you have on the screen now, but there has been a consistent trend of a downward market, and I think there's more to come. And my trading for the last few weeks, I have had very, very little long positions. I've been shorting every bump in the market, and it's been successful. I would be very careful, you know, of anybody in here who's sitting back, and I think it's human nature for us to want a win, which is bullish, which is up, which is increase. But I would just be very, very cautious for those that are hoping for those bullish wins. I don't think there's many to come, and I would be very, very cautious.
I'll not be surprised if we go to once we break 41.95. I'll not be surprised if we hit 3,600. That is the only thing which is holding up the market right now. 41.95. That's the breakout from the October's back to October. And again, do not go by seasonality that yes, this thing works in the past or that thing has worked in the past. This is a totally different market. Federal Reserve Bank is trying to sell off their assets to reduce their balance sheet. So you will not see buying happening. Every rise will be sold unless we have something seriously like cooling off the inflation. Crude is not cooling off. It's not going to come down. So all this is adding to the inflation concerns. Maybe even today, the job numbers, they came higher. Then there are still jobs in the market. So that is still pushing things higher.
Hi, Neville.
Okay.
How are you?
Yes, Mitchell, go
Hey,
ahead.
what's up? I'm Rex. I'm a Rex on here. So yeah, I've been listening to I've been following you for a couple of years now, and you were spot on about like the balance sheet reduction and just like selling on rise. What advice would you give just people on here? Because some people, I like to ask questions just for the whole group. What advice would you give somebody on here who it's difficult for them to trade during like a big reversal market, or they're having a hard time with their entries, or avoiding like stop loss hunts because things bounce off support really quickly and just come back?
Avoid. Just avoid.
Just avoid it, yeah. Because it's a very volatile market. Obviously, you could tell futures was very volatile just an hour and 15 minutes ago. We just dropped like almost 20 points. And then kind of now we're consolidating. So I think a lot of retail traders are like, it confuses them when they, we was in a big uptrend, then the market just kind of turns over. We know in the back of our mind that it's stairs up, elevator down, but I think a lot of people can't gauge it. And then when they're taking these trades, they're still getting, their trades are working for them. They know what they want to do, but they're still like, they're getting stopped out because something's bouncing off support and it's not retesting and rejecting. It's spiking up 10 points on ES and then it's coming back down. So I think it's confusing a lot of retail traders.
Yep. So I would simply say in this market, wait. If you cannot wait, try to reduce your size. If you used to trade with 10 lots, better to come with maybe 2 or 3 and let them run. If you're on the wrong side, exit. If you're on the right side, let them run. Because even if you run 2-3 stocks or options in the right direction, 2 days it can cover your loss very easily. But trust on your data points, not on anything else. This market will be very news driven now, and anything can happen. So avoid Twitter for the best. It's going to create confusion. Do not read articles. Just look at the data which is right in front of you. Second most important thing, if you're sharing some information, make sure you vet that out. Do not share any information which you have not verified yourself. Maybe it's an article, maybe it's news, maybe something. Like right now, if I remember, somebody posted about I forgot. It was regarding Bank of Japan, and then it was confusing. That's why I explained everything with respect to Bank of Japan. In this market, clarity is the most important asset. Make sure you have it, and then you trade on that. Yes, Yoke.
Hi, good evening, Neville. I thought that you were really spot on when you were making the prediction. I think as early as July, saying that from late September to early October, it will drop. And I think that is what we are seeing right now. I kind of have a different views from majority of you, and I'm happy to be wrong. When I'm looking at SPX chart, I think that 4,002 level is very critical. That is the first point. The second point is when there are divergence among the indices. For example, right now we are seeing lower low on SPX, lower low on Dow Jones, but Nasdaq is actually holding up pretty well.
Yes.
I kind of am thinking, I can be very wrong again, once again, and I'm okay to be wrong. I kind of think that we may actually get a year-end rally. And that is purely my opinion. I just thought of bouncing this idea with the team to hear that.
What's the rationale to push? Where would you bring that money? Like the yields are not coming down.
Okay.
So
okay. Okay. Fair point.
And again, the yields are at around 4 point. Right now, it's 4.85. I'll not be surprised if they cross 6%. I will not be surprised because now it's a double whammy. There's a higher interest rates. They're going to be higher. Plus, the bank of not the bank, the Federal Reserve is cutting down on the balance sheet aggressively. That is also going to impact the yields. Every push in the tech will be offset by the balance sheet. That's why Microsoft went $12 to 322, 323 2 days back. Now it's back to 311. Netflix went to 395 today and then pushed back to 375, even if it raised the rates. So that it could be very volatile market. I don't know whether it's going to be a rally or not. I don't believe that. But if it happens, it will be surprising.
Thank you.
Again, I'm saying we have not seen the worst. It has not even started.
Hey Neville, this is Nilesh. I have a little different view on different view on yield. So I think yield is going to go up, right? So TNX right now it's at 4.8. I think if you look at the 20-year chart, right, the yield was the highest. It was at 5.3. So kind of my opinion, I think I actually don't think it'll cross that right now. I think for this year, I think it's going to go up to 5 probably, and it's going to pull back. And then most likely, I think towards either beginning of next year, I think then it'll start going up again. But based on kind of what I've been seeing in the bond market, it looks like between 5 to 5.2 is where you would probably see a little bit of a pullback. And I think that's where you'll probably see the market rally a little bit, but it's going to be a short-term rally, just kind of in my opinion. But like Rick Santelli said, it's going to go up to like, I don't know, some huge number. He was saying like 8-9% or so. I don't think that's going to be the case, but I think it's possible, but I think it's going to try to test that 5.3, that 20-year high. And I think if it rejects from there, then I think there's going to be a rally in the market. If it doesn't reject, then yes, it will definitely keep going higher. So
if we go back to if we go back right here, I'll just change it to maybe weekly. This was October 2022. Where it went to 4.2 and then it cooled off.
Yeah.
Okay. And it cooled off until July, and where we discussed that the inflation will start to come. Now, from this point onwards, it has only started 38. I'm just giving you an opinion from Elliot wave perspective. If this was my 0 to 1, and we can validate it right away. This is 1 to 2. 2 to 3 is 161.8% of this run, which comes out at $8. Okay. Second thing, usually in Elliott wave, we go up, we come down, and this is 38.2% retracement. Okay, so let's check that retracement. If it is correct, then Elliott wave is setting up. Right there. Right there. This is 61.8. Right there, which is, if you subtract 100 minus 61, 38.2. So this is a very big cycle which is about to happen. And if you look at Elliott waves, and that's why I use Fib so much, this 2 to 3 cycle is always the biggest in the turn. And I'm not done with this 8. I will not be surprised if we even cross to 11. That is my ultimate target. That's why I'm saying things are going to get really bad.
No, you're saying
That's
11
from
for,
the Elliott wave perspective.
yeah, you're saying 11 for the
11%.
inputs, right?
Yes. 10
Wow.
years. Yes. It will happen.
Okay.
It looks unimaginable at this moment. But if we see right now, the only sector which, if I go to market watch and visualize, I'll definitely, let me go to Finviz. Finviz has a better thing. Finviz. Finviz heat map.
But Neville, you're saying you see just an upward trend. You don't see any pullback, or you're saying there's going to be a healthy pullback,
In
but
2
then
to 3 cycle, there is no pullback.
2 to 3 cycle. Okay.
The pullback was 1 to 2, which I showed. So
Okay.
if we go right here, year to date, look which all stocks are green. 30%, 32%, 50%, 100%, 150%, 50%, 50%, 200%, 50%, 25%. What is getting red? How long this 10, 12 stocks are going to hold? How long? Matter of time. If you take their moves out, S&P should be down by 12 to 15%. Like if you cut down 30% from Microsoft, 30% from Apple, where would you see ES as of now? Imagine yourself. So there's very big area of cleanup which needs to happen. And again, there's a possibility that market finds some reason to bounce, these stocks will show the first step because they're not giving up. But the moment they start to give up, they will not look back. Like Meta is holding 300 area, Microsoft is holding 310 area, Nvidia is holding 435, Amazon is holding 124, 125, Google is holding 132, 133, Tesla is holding 240. The moment one of them starts to give up, they will all give up.
Neville, but if you look at the year to date for ES, right, from the top where it was to where it is right now, it's about 8 to 9% correction, right? So, and then
Yes,
when we
because
talk
all
about
these
correction,
stocks corrected much more than that.
yeah, but if you
Just
look
check
at,
right here.
okay, but if you
I'm
look at
saying
the
that
whole,
if we have if we take out these stocks, S&P will be 12% plus 8%, which is 20% down, not just 8%. It should have been like 20% down.
yeah,
And when the equities are losing, where would the money go? We have a lot of money in the market. That is also going to push into treasuries or into the bonds. The biggest concern I have is the debt is going to create some problem with dollars. And with speaker out, we are just away 45 days away from the mess again. That time it will not be resolved very quickly. We have a temporary government.
yeah, we just have a stopgap right now. So
It's a stopgap, but it's like we know that the next one is not going to be entertained.
yeah, in dollar is just an uproar right now. So there's no coming back for the dollar. So it just doesn't seem like there's nothing there to pull it back.
Yes, and something will happen. Like a few days back when we were talking, I was mentioning that yield going higher, dollar going higher, crude going higher. Why is not market falling? Market finally took that into consideration and started to fall. So now, expecting yield to cool off, you need to have a solid reason. Is bank going to cut the rate of interest? No. That's only thing which will bring the yields push back down.
But the one good thing, Neville, is like this is the bear market is where you make the most money, right? Like for if you think about from a trading standpoint, buying the like bear markets is where people make the most money. So I mean, and that's a good thing.
Again,
Like if people trade right.
I'll add a few points to that. Bear market is a very different market, which has just started. Okay. The market which you have seen in the last 20 years, they're always V-shaped recoveries. Always. Bear market never has a V-shaped recovery. It will grind you to the bottom of your account. Even if you're a short, you will see some rallies which will kick you in the face. If you're a long, you're already in trouble. So bear market is a slow grind. It is not like simple fall. That's why it is called as the bear market. It is a very difficult market to trade. What we have seen in 2020, what we have seen in 2018, let me just go and show you. Let's just simply look at ES. Let's not go anywhere else. Okay. This is 2022. What we saw, a V-shaped recovery right there. That's 2022. If we go and go to 4-5 years, this was COVID. Again, a V-shaped recovery. This is 2018. Again, a V-shaped recovery. Bear market, you will never have a V-shaped recovery. Never, ever. And that is a very troublesome thing. If we start to have bear market, it will only go like this. Slow, slow, and slow. It will always give you hope. I'm bouncing. It will bounce and then give up. Bounce and then give up. Bounce and then give up. And once everyone is done, it will start to move. So bear market is different. Again, that's my thought process. Maybe I'm wrong, but this is what I've seen. Because I've seen bear market in India and in England. I have not seen that kind of bear market in America because I was not there. Like the best example will be if you go back to SPX, maybe in yes, right there. This is 2008, 2009. Okay. Look at this bear market. Come on, hold it. He went up, come down, went up, come down, went up, come down. Every time, and it happened for at least 2 years. Come on, hold it. For 9, I don't know why it is changing itself.
Yeah, and I'm just saying that like it's if you play it right, you could make really good money in a bear market if you know how to manage your risk and then you play it correctly. So
Yes, see that thing is always there. If you know how to use it, you can always make money. It doesn't matter it's a bear market or a bull market. That becomes irrelevant. It depends on how you trade it. But this is a clear head and shoulders. If you want to call it double M, you can call it double M, double top, whatever you want to call it. It's right there. 4095 is SPX, which is still 130 points from here. So let's see. Again, if there is to be bounce, triple Q will lead, but I don't know how long it's gonna hold. Right now, triple Q is holding by a very thin line. The moment we start to lose 310 on Microsoft, 300 on Meta, 125 on Amazon, just see that yes, things are going bad. Now let's look at the levels for tomorrow where we can trade on ES. So ES like 4277. If somehow we manage to capture that 4277, then we might see some squeeze to test 12 EMA. We have not tested 12 EMA on ES at all. And this may happen that all the Dow stocks may move and the tech stocks may hold. And that will give you a very first inclination or direction that yes, next leg of going down is for tech. Like today, BA after a very long period tried to hold. The market was going down, it tried to hold, but eventually it also gave up. Caterpillar is holding beautifully 268, 269 area. This is the gap. It tested, but then bounced and managed to hold. So they want to hold. They will hold so that market can cool off from the other end. As of now, all these stocks are following like Triple M, Nike, Target. All these stocks were like destroyed, decimated. Now they will hold. They will not go down with the market. But if market goes higher, let's see if triple Q goes higher or triple Q starts to lose its momentum. Let's also look at the book map. $42.40 is somewhere we have support. So as of now, 42.25. That's the area which I think we will test if we hold. Yes. Right now, that's the only area. If we lose 42.40, we are going towards 42.10, 41.90. higher 42.75, then that's a test. I think back test is a must. So be careful, wait and watch and trade. Now let's also look at some of the flows where we see some really heavy options. So anything above 500 to 1 million in weekly. I'm just taking weekly. Triple Q 340 call. SPY 415 calls are sold. Just be mindful, 415 calls are sold. 425, oh, this is 7,500 lot. This is really interesting. $425. I need to see what happened to this. But maybe a rollover or something, I don't know, but that's a very big traded quantity. But these are all calls which are sold. 340 calls are sold for triple Q. 340 calls are again sold. These are not small amounts, these are big amounts. If I clean this up, and that's why I'm thinking that triple Q may be the next one in the line. See, 340 calls. It started at 361, right at 955. Somebody bought them. 340 calls at 45 of 10.3. Now, whether those were actually bought or sold, let's check. These calls were 21 to 16 to 15 to 15. So these were definitely sold because the price went down, and even if the price was similar, like 30 cents, the price of the option went down considerably. So let's see if tomorrow we have some open interest on this one. We have 600. So I'll be looking at this tomorrow. So today is closed, so it's done deal. So it's not to be worried. 10.4. 10.4 is interesting. All these are sold. 1585, 1516, 1526. So these are the calls which are sold. Why? The price of the call went down. The IV is also going down. So tomorrow, again, let's look at this. These are 98% on the bid. So current open interest is this. So if they are down, so it means somebody is expecting 340 on triple Q, or at least he wants to get some profit from here. Like if we are above 355.70, that guy will exit. If we are below, then this guy will hold the positions. So that's about this one. If I remove the ETFs, Nvidia has a put. Tesla put are sold 240. So it's me check. I don't know what NEE does. It's there. Tesla 285 put. Triple M blocks. Amazon put. I'll just do sweeps, further clean it up. So Nvidia 450 put a call is there, which was in the morning. I think that will be gone now. 460 put. This was again at the same time. Maybe it was closed or something. I don't know. It's at the P. And it is in white. 245 call was added. not a clear picture, but triple Q is telling me 354, 55. If we do not cross it, we are going down. In terms of ES, 42.75 above, we can see short squeeze. Otherwise, we are looking towards 42.10. In terms of NQ, NQ is head and shoulders ready. The gap was filled. The moment we lose 650 on NQ, 436 is the area. 436 will find support, otherwise 121. I think we should see 3900, that green line that will equate to the length of this shoulder. So it's a matter of time when that can happen. But I'll be careful. I'm like trading very low, less. I'm just trying to understand the market because I've done a blunder in my account. So I'm just giving myself time. Guys, and any questions here? Because I'm not going through that sheet tonight. Just wanted to discuss this so that we understand what is happening and then take a cautious approach towards trading. Anyone has anything to discuss or share? Go ahead, please.
Hey, Neville, what's your thoughts for tomorrow? What do you think? We still, the way it closed today and ES bounced up a little bit, do you think we might have a small gap up and then pull down, or this is right off the bat, you think it's gonna go down? What are your thoughts?
Do we have any data coming in the morning? Let me just check.
I think there's a couple of Fed speakers, but I don't know what time they're speaking. A couple of governors, I think, are talking tomorrow.
Fed speakers are all right because they've already done what they could do. So
They've done enough damage. Yeah.
OPEC meeting is interesting at 6 a.m. We have ADP employment numbers tomorrow morning. We have S&P. We have PMI numbers tomorrow. We have a lot of data, man.
Yeah, but
Yeah,
the
we
numbers
have
that came out for the numbers that came out for JOLT, do you think that, like the employment numbers coming out tomorrow, do you think they'll vary
I
by
have
much?
one concern with those numbers. Let me open this line. I don't know how these numbers were projected, but if you go back, there is a revision. There is a bloody revision every single time. So I don't know what's happening. They are revising it. See, October 29, it came as 8.827. It was fixed to 8.9. It came as 9.5, fixed to 9.16. Okay, having almost number and having this number as a mess is a totally different ball game altogether. This one, just imagine how they are manipulating it. If they are revised, why you are giving it the wrong number in the first place? This was 9.77. It was a mess and market went higher because there, but eventually it came out to be green, which was almost matching. And this is not happening like only for 1 month. For past 12, 13 months, it's happening. So Joel numbers, I don't know how they are going to be revised. You're getting my point that this is a very difficult thing to understand. And this is like happening, happening, and happening. It's getting revised, revised, and revised. So they do not matter much because there's a lot of revision. But if you go back and look at the other data, which is coming tomorrow, this does not change too much. Yes, there are revisions, but they're Even this revisions are there, even here. And these revisions are not small revisions, like from 324 to 371. How would you trade them? In the 50K, almost 20% data was, and then from 497 to 455. That's why I don't know what to do with these numbers which are coming.
So the OPEC number you said that's coming out, like crude is trading at 89 right now, right? So like
I think OPEC will say that we are not cutting down on our, we are not increasing our production. So market is waiting, and as I anticipated, we should do a 12 EMA as well as 34 EMA back test, and then continue the journey.
journey upwards for
Yes.
crude. Okay.
Yes. If it again, if in the morning crude breaks down, that will be a relief for the market. Because when the market economy is in bad shape, crude should not be higher. Crude is higher because the SPR, which is the petroleum reserve for the US, is only there with the 17-day period, and OPEC is not increasing their production. They have no plans to increase. So if they still be on that same range, crude will jump.
You think crude could go up to 100 again?
I am anticipating 120.
Oh, that high. Wow.
See, that's the next wave, 161 and then 122.
Okay.
It's a cup and handle breakout. It will go higher. Now, the only way it can fail if it fails 87. If it loses 87, then it will cool off. 87 we fail, then we cool off. As
Okay,
of
so
now,
your
it has gone up.
So your downside level is 87, right?
87
That's
is my
the
support.
support, yeah. Yeah.
If it loses that, then that's it.
Okay.
Anyone else, guys? I still have a few minutes if anybody wants to share their thoughts. Anybody in the YouTube chat, if you have any question outside of your tickers, because I'm just trying to give everybody a idea of what is happening in the market. That's the reason I'm doing this call tonight. Yes, Justin, you were saying something?
I was just gonna ask you, when you shared the heat map year to date, I think that was pretty telling. You can clearly see what's holding up the market, QQQ and tech. Maybe for some of those that are not so much day traders or swing traders, options traders, people that try to pick stocks that have potential to go up. If we do go into, well, I would say we already are, but bearish market, but more of a full-fledged recession where we could see a year or 2-year low. From experience or just from data or research, what is there stocks that do stand out in those times? What comes to mind is people are obviously going to still have cell phones, so you can think of the telecom, you can think of food like Walmart, Kroger's. Is there any stocks that stand out during those periods that people could invest in with potential rise in a down market?
I always believe in the alcohol stocks. They will
Which one? What stocks?
Stocks, alcohol stocks like Budweiser.
Yeah.
Gambling stocks.
Yeah.
They will go up. That's the best time because people will drink no matter what. And with this in bad situation, that will become a difficult situation fundamentally, but that is going to happen. Like when I used to trade in India, we had a company, McDonald's, which was acquired by a UK company. That stock used to do wonders. It used to move.
Yeah, we saw some of that during COVID times. I don't think it's exactly the same, but when people aren't spending money on consumer products or unnecessary product, people have to eat, people will drink, people will still use cell phones. Those are the things that stand out to me as well.
Yep, Netflix will run because people will stay at home and watch Netflix. Roku will run. Let's see. As of now, let's see. Again, we are not too far, but we are not near to it as either. Tate, you want to say something? Okay. Anyone else wants to speak? Otherwise, I'm closing it for the night. Krish, Howard will know pain is over. When everybody is selling, then pain is over. And again, I'm telling you, there is no long-term market. The market is where you make money, is see profit, take profit. Imagine just 10 days back, if you invested in something like Amazon, you're already down 20%. And we are talking about a $1 trillion company. So, all right. Thank you for joining, guys. I hope tomorrow will be a better day for every one of us. Let's make some good money. If not, at least we do not lose money. And all the best. Thank you. Good night. Take care.
Thank you, everyone.